started. So observing the index futures chart, we can see that from Tuesday's open, price traded higher earlier on within the day and created a crack in correlation with Monday's high. And we wanted to see, a crack in correlation with Monday's high or low in order to determine what the morning session would likely do or what would likely occur, right? So seeing that crack in correlation, right, was an indication that the market was likely to do exactly what it did today with this sell-off. And the thing that really set the price move in motion was this here. This 4-hour TPD with the 6 o'clock candle. So as we can see, the S&P 500 has a higher open compared to candle one's close. The Nasdaq has a lower open, and the Dow Jones has a higher open, right? So there's that cracking correlation at play. Now, upon this candle closure here, what does that tell you about strength and weakness? What does that tell you for which asset is what? In terms of, okay, this asset here is stronger for lower, or this asset here is stronger for higher, just based purely on this candle's close. That Nasdaq is the strongest for downside. Exactly, right? Nasdaq was the proper asset to short. Now we're going to cover something else that I didn't really talk about yesterday, but notice how I was very prone on seeing an SMT occur, right? I mentioned it more times than I probably should have. And that was due to the fact if we take this daily candle right here, being Monday, what do we see with this candle? Is there anything special, unique about it? So if we look to the left of this candle here and focus on the closure of this candle, right? We draw the close of this candle to the open of this candle, right? Being Tuesday's daily candle, what do we see? A daily time frame TPD without the quote-unquote candle color difference. So every single precision swing point that you see in the market has a TPD, but not every single TPD you see is a precision swing point. It doesn't matter what the color of the candle is, right, among the assets. A TPD can tell you when a crack in correlation is likely to occur, and it doesn't matter the color of the candle, right? And that's something that you can see now that we have had the day play out, right? We anticipated a weekly cycle crack in correlation, and we can see we had an amazing price swing as a result on top of a lower time frame TPD. And if we go from a 4-hour chart down to the 1-hour chart, specifically focusing on the Nasdaq, what do we notice was inside of the TPD candle? A 1-hour reversion level. Now, if we take a look over at the S&P, does the S&P have that reversion level? No, it doesn't. If we take a look over at the Dow, does the Dow have that reversion level? No. So what does that automatically indicate if you were to take a trade? Which asset would be the best asset to trade? Nasdaq, right? Trading right here. As soon as 10 o'clock opens up, selling anywhere inside of this candle here. But Jacob, you've told me in the past, whenever we have a TPD, that indicates an SMT. And if we look at the high of this candle here, there was no SMT, right? There was no double crack in correlation. And you would be correct. But here is the thing whenever it comes to actually trading TPDs and reversion levels. And this is something that I know has tripped many people up in the past. But if you are trading the strongest asset, in a particular direction based off of a TPD. Should that asset be the one that creates, the stop run if another SMT were to come about because of a higher time frame TPD? No. So should it be a concern to look for, that cracking correlation at the high of a TPD, especially if we have, other things backing it up? No. Right? So seeing something like this here, and this is quite literally a textbook setup. But if we look, if you were to enter anywhere inside of here, a safe area for a stop would be above this high here, because you would not want to see the market trade higher and go for this high, as you would expect the NASDAQ, being the strongest asset to the downside, remain the failure swing asset, even if it were to create an SMT. So now looking even a little bit closer to the day. So I noticed some of you tried to enter in a little bit early, right? And we can see right at 9:30, the NASDAQ ended up dropping lower, but then traded higher once more, right? Hitting some of you out of the market and then making the real move. Why would something like this occur? And how could you prevent this from happening in the future, from quote unquote trying to get onto the run too early? Well, if we take a look back, we can see that all the assets have traded above the London session high. So there is zero probability for a bearish London and morning session cracking correlation, right? Zero chance for a daily cycle sequential SMT. And if we look even further, we can see coming into that 9 o'clock hour, right at 9 o'clock, price ended up taking out the previous quarter on the 90-minute, so being Q2 of the 90-minute cycle, ended up taking out that high as well, leaving zero chance for a bearish 90-minute cycle crack in correlation. And simultaneously, while it did that, the NASDAQ ended up taking out Monday's high, creating that bearish weekly cycle sequential SMT. So with everything that we have here, coming into that 9:30 open, there's only one stage. There's only one thing hinting at why the market should do one thing over another, or why the market should drop. And if we take a look over at the NASDAQ, we can see that it just barely swept Monday's high. If you ever have this occur, where there is no second stage, it's best to wait for something else to come about, right? Trying to get onto a run early on, whenever it just creates, an SMT and nothing else. Don't be surprised if something like this occurs, right? So what was the second stage, or the quote unquote second stage cracking correlation for what we had today? The 4-hour, 6 a.m. TPD, right? That was the thing that agreed with the weekly cycle cracking correlation. And it wasn't until then that the market really made its run and really tipped its hand for the overall direction of the day. So for the future, if you are ever faced with a predicament of, okay, I see a cracking correlation that just formed in the morning, but I have nothing else agreeing with it, chances are you should wait it out for something else to come about. And if nothing else comes about and price just continuously expands and runs off without you, then you can either A, do nothing at all, or B, try to frame a gap entry, right? But as we can see here, there was no bearish gap, right? No real bearish displacement. I said I wanted to see the NASDAQ run the high again and then sell off, but I took it in FOMO'd into it anyways. It happens. It is what it is. But now you know. Sometimes you have to make mistakes like that in order to learn. Monday's high on the Dow wasn't symmetrical to the S&P and the NASDAQ. Can you talk about that? Sure. So if we go on the 1-hour chart, we can see that Monday's high on the Dow formed at 9 o'clock, right? And on the NASDAQ and the S&P, it formed at 11 o'clock. So this isn't symmetrical in terms of exact